Hey everyone, welcome to The Explainer. So, if you've never borrowed money before, the whole financial system can feel like this incredibly complex, totally locked door. Today, we're handing you the keys. Our mission is pretty simple. We're going to demystify exactly how to build your financial reputation from absolute zero. Here's our game plan for today. We're going to tackle the credit catch-22, look at 4 strategies to actually start, run through the absolute rules of building credit, and then finish up with some warnings and smart habits. Let's dive in. All right, let's jump right into section 1, the credit catch-22. It is literally the ultimate financial paradox, right? How on earth do you get credit without having credit? Lenders want to see this solid history of responsible borrowing before they hand over a single time. But you absolutely need them to lend to you first just to build that history. It totally feels like a rigged game when you're on the outside looking in. So, how do we actually break this loop? That brings us to part 2, 4 strategies to start. Strategy number 1 is becoming what's called an authorized user. This is where a parent or a super trusted family member basically just adds your name to their existing credit card account. And it's kind of like magic. Their account history, including all those on-time payments, suddenly appears on your report. You literally don't even need to hold the plastic card in your hand to reap all those benefits. But hey, quick heads up here. This is definitely a double-edged sword. It really only works if that primary cardholder has excellent financial habits. Because if they miss payments or max out their card, those negative marks are going to mirror right onto your report and drag you down with them. So you definitely want to choose your financial partner very, very wisely. Now, if you want to fly solo on this, strategy 2 is the secured credit card. What's brilliant about this is how it totally flips the risk for the bank. You just provide a cash deposit up front. So you drop $300 and boom, congratulations, you instantly have a credit card with a $300 limit. Because your own cash is acting as collateral, lenders are incredibly willing to approve you. So here's how this plays out in the real world. Month 1, you deposit your $200 to $500. Then for the next year or so, you just use the card for one small purchase a month. Think like a single tank of gas, and you pay it off completely. By the time you hit months 12 to 18, a lot of issuers will actually just upgrade you to a regular unsecured card automatically and hand you back that original deposit. Patience really does pay off here. Are you enrolled in higher ed? Well, then you unlock strategy 3, student credit cards. Banks specifically design these things for absolute beginners. They've got way more lenient approval standards, safer credit limits, usually between $300 and $1,000, and they generally skip the high annual fees while even tossing in some basic rewards. It is honestly the perfect stepping stone. Okay, strategy 4 is the credit builder loan. You usually find these at credit unions, and it's basically a brilliant forced savings program. You apply for a small loan, but here's the catch. The bank locks those funds in a savings account. You then make your monthly payments, which builds your credit history with every single on-time check. Once it's completely paid off, they unlock the account and just hand you the cash. So you walk away with a great credit score plus a nice chunk of savings. Win-win. All right, moving on to part 3, the rules of building credit. Let's actually break down how your score is calculated. Notice that massive 35% chunk right at the top? That is your payment history. Guys, more than a third of your entire financial reputation relies on just one thing, paying your bills on time. Literally, one single late payment can completely wipe out months of hard work. It is absolutely the heaviest factor in the whole algorithm. So, based on that math, you've got to memorize these 5 laws. 1, pay on time every single time, no exceptions. 2, keep your utilization low. 3, don't go opening too many accounts at once. Doing that just signals financial desperation to lenders, and we don't want that. 4, keep your old accounts open. Closing them actually erodes your credit age. And 5, just be patient. Building real solid credit strength takes a good 12 to 24 months of solid discipline. I want to pause on rule number 2 for just a second. 30%. This is your golden utilization ratio, meaning if you have a $1,000 limit, you should never, ever let your balance cross $300. Showing that kind of restraint proves to lenders that you aren't stretched too thin. And hey, if you want to really maximize your score, try keeping it under 10%. And that brings us to our final section, part 4, warnings and smart habits. First up, a pretty major warning. We have all felt that pressure at the retail checkout counter, right? When they offer you 20% off if you just sign up for their store card today. Resist it. Store cards carry brutally high APRs. We're talking often hitting 25 to 30%, and they are psychologically designed to make you overspend. you're much better off sticking to standard cards for safer everyday use. Which leads us perfectly into our ultimate smart habit. AutoPay is your safety net. Full payment is your goal. The real trick here is to set up automatic payments for your minimum amount due. That basically guarantees you'll never accidentally miss a due date. But remember, that is just the net. Your actual goal? You want to manually log in and pay off your full balance every single month. That way, you literally never pay a single dime in interest. So, we've conquered the catch-22, we've gone over the starter strategies, the core rules, and the hidden traps. Looking at all these tools we've just laid out, the question now rests with you. Are you going to go the authorized user route, a secured card, a student card, or maybe a builder loan? The keys are right in front of you. Which door are you going to unlock first? Thanks so much for hanging out with me for this explainer, and I'll catch you next time.